Happy day, everybody, and welcome back to Mortgage Talk with Mark. I'm really excited you guys are back on to the show with me because I have been out of the studio for probably about a month through the holidays. And this is actually the first show of 2025, and I'm very, very excited to introduce a friend of mine. As I usually say when I start, the goal here is to bring in subject matter experts on different subjects around real estate, finance in general. And today we have a true, what I call expert. She's so much of an expert that I've hired her for my own personal business. So this is a conversation. If you're over 62, you certainly want to listen to, or if you have parents that may be over 62, you want to listen to about how to leverage equity in a property and supplement your retirement income. And I'm really happy to introduce my friend Christina Harmes Hika. She's hails from California. You're not affected by the fires, are you, Christina?
Luckily, no, not right now.
Okay, good, good, good. Well, that's really a tragedy out there, what's going on. But I've known you about 4 or 5 years now, and I follow you on social media, and we've talked about my own personal situation here in Austin. My wife and I have. So we want you to introduce yourself, and then we're going to start getting the meat of the subject here.
Yeah, thank you so much for having me on. It's an honor.
Good.
So introduce myself. I'm Christina Harmes Hika. I am a certified reverse mortgage professional. I've been that for almost a decade now. I was the youngest to achieve that designation, and it's little known unless you talk to somebody who is one. There's only about 200 of us in the country,
Mm,
but that really is the highest level of understanding of reverse mortgages, and we hold a oath to ethics. So I think that's
mhm.
really really important. It's a lovely designation to get.
Yes.
Um, but prior to that, I started people are like, "How have you been in this industry so long?" I started my dad's office when I was 16. He was
Oh,
a
wow.
mortgage broker, and so I learned the ways of mortgage, and then I actually sold real estate for some time, and then when I closed my first reverse mortgage, my life was just absolutely changed.
You fell in love with it.
I fell in love with it. It
Yeah.
was so weird and so customizable and so flexible for
Yeah.
it we fixed exactly what they needed and
Hmm.
more,
Hmm.
and it would just change my life forever.
Well, it's rare that I find somebody that's as passionate about their business as you, and I just love that. That's why I wanted to have you on there and speak to this subject that has a lot of myth around it, misunderstanding too. And so, let's start with kind of a high level conversation around what exactly is a reverse mortgage and how is it different than traditional loans, which I do?
Absolutely. A reverse mortgage is a really cool it's a relatively newer mortgage. So it was
Okay.
created in 1989, which is pretty young for a mortgage, right? Before that, we had VA in the 40s. And so it's taken some time to work out some of the kinks. And so people have some idea or they may not understand it at all. But over time, the reverse mortgage has changed a lot to where we are today, where it's an amazing, amazing loan.
Mhm.
It's for homeowners either 55 or 62 and up, depending on the program and state. The most
Okay.
common one you hear about is the FHA HECM, Home Equity Conversion Mortgage, and that is 62 and up in every state. But there are other reverse mortgages for some people in some states for 55 and up. Essentially, the main key points you need to live in the home as your primary residence. At least one borrower must remain, or non borrowing spouse.
Okay.
You can pay your taxes and insurance. It's owning a home. That's a big thing. People have a misconception that, "Oh, I'm gonna make all the payments go away." A reverse mortgage allows you to choose if you want to make a payment or not. Most people choose not, but they still have to pay their taxes and insurance and
Sure.
any
That's how I do it
HOA.
anyway.
Yeah, it's a mortgage, which is a lien on title. The bank does not take ownership of the house any more so than they do with any other kind of mortgage.
Mhm.
The difference is there's no required monthly mortgage payments. There's no term. The term is the youngest borrower's 150th birthday. So, we say no term, but I
Yeah,
mean,
right, right.
somebody
Not
might get there
likely.
someday.
That's pretty interesting.
Yeah, and it's really designed to be really flexible. You can get a lump sum of cash. Some people need to, like, fix a roof, or they've got one of the cases I had huge IRS debt.
Mm.
Credit card debt's really common right now. So, there's just a lot of ways to do this thing. One of them is a lump sum. Another is a line of credit that actually grows and isn't frozen when the real estate market takes a downturn, which is very unique for a line of credit.
Yes.
Um,
That's
and
that's
then
what I love about when you talk to me about my own personal situation, because I don't think I'm that unusual as far as baby boomers go. I turned 65 in October. My wife has recently turned 62. So we qualify for this product. And we have a couple, several, well, 3 homes in Austin. One of them has quite a bit of equity in it.
Mhm.
Okay. And we are moving back there to become a homestead. And what you showed me was how I could leverage that equity and have options to supplement any sort of retirement income down the road. Now, I'm not going to be doing that now. I don't need the money today because I'm still working and that sort of thing. But down the road, I may. And so it's a sort of a safety net in case I do want to tap into at my equity and not have to move to get it. That's the key right there.
Yeah. Well, and I love your strategy because you're doing it while you qualify easily, right? You've got income, you've got good credit, you've not hit any sort of life event that could damage those things. So you're putting it in place now so that if anything happens in the future, you already have it. You don't have to qualify at that point, which some of my clients come to me at that point when there is a life crisis and a
Yeah,
financial crisis.
it could be
And
too late.
sometimes it is.
Yeah,
It's often too late because we
mhm,
still have credit and income qualifying. You can't
right.
be, 2 years late on your mortgage and still make this thing work in a lot of cases.
That's right.
Sometimes there's magic, but in general, that's not the greatest plan.
So let's talk about some regulations. One of the myths around or confusions or misunderstandings around reverse mortgages is the bank takes title to your property, and that's simply not true. So let's go through some of these myths that people just don't understand about them.
Yeah,
Let's
thank you
clear
for
that up.
addressing that. Yeah, so biggest myth that the bank takes ownership and people
Right.
think, "Oh, I'm selling the house to the bank." And I think that comes from the idea of a charitable life estate
Mm,
because there is something weird with charities where you can't, and I don't fully understand it myself, so I'm not gonna speak to the high level of it, but where you can sell the property and then live in it for the remaining of your days.
got it.
That's not a reverse mortgage. A
Yeah.
reverse mortgage is just a lien on title, just like any other mortgage. The difference is that it's not a 30-year term. You don't have to make required regular monthly payments. And there's a lot of flexibility in the ways you can manage the equity, right? The
Mhm,
line of credit, you can get a monthly payment to you if you want.
mhm.
And you can manage that. You can pay payments if you want to or not. It's fully up to you. I like to think of the reverse mortgage as finally being in control of your cash flow
Yeah.
for your mortgage and your equity.
I love it. I love it because on one of our properties, we have a what they call a HELOC, which is a line of credit. And the distinction that you taught me was the difference is primarily a line of credit on as a HELOC is a fixed term, $100,000 or 150, whatever, and you have to pay it back, which we're doing currently because we have a small line on it. But if we were to roll that back into a reverse mortgage, not only do we have an option of deferring that payment, if you will, but the line of credit continues to go up over the years,
Yes.
which is a lot of people don't understand that. I didn't really understand that either, but the numbers you showed me were like, man, this is a no-brainer.
It's beautiful, right? Once people see it, they're like, "Wait, what? This it's too good to be true." And then I have to remind them, "No, no, no, you're paying for some cost to put this in place. It's not too good to be true, but it is really good."
Yeah, exactly. So let's talk about, and we touched on this, but senior citizens, these, if you will, baby boomers. I'm a senior citizen, which is kind of hard for me to say, but I am.
It's
And
hard to say it looking at you. I'm like, "No, you're not. Don't say that.
oh,
That's
you're so
not."
kind. You're so kind. In my era, pensions has sort of gone away. Most people don't have a pension unless they work for the state or something like that. But a lot of people have 401k and investments that they're going to live on, Social Security, that sort of thing. But how can explain a little bit more about how this can supplement people's retirement and how they can maybe hold their assets over here and use this tax free. You said it's tax free income, correct?
Well, we can't call it tax-free income,
Okay,
but it is tax-free under the IRS laws, so it's cash flow. It's
it's
your equity, right?
yeah,
It's
it's your
not
own
your
money
income.
basically.
Yeah,
Okay.
so, we don't call it income, but it is cash flow for sure, and I love that you're talking about that because the baby boomers all are more creative. They're more open in general to
Mhm.
figuring this thing out and working with the finances the best way that makes sense, not some hard, fast rule of, "I need the house to be paid off." But if we twist that a little bit, the goal of having a house paid off is to have no mortgage payment, right? You wanna
For
lower
sure.
your expenses in retirement.
Sure.
Well, there's only 2 ways to do that. Have the house paid off, no mortgage payment. No, the other one is a reverse mortgage, no mortgage payment. And so it really allows you to manage those assets and I have to say your strategy is one of my favorites where you have some rentals because rental income keeps up with cost of living. It keeps up with
Generally
your
speaking, yeah, that's
expenses.
right.
Yeah, so some people will do a reverse mortgage, they'll get a big lump sum of cash, and then they'll go buy a new property as an
Yep.
investment, and they'll remain in the one that they're have the reverse mortgage on, and then that investment pays rental income.
Yeah, I
It's
love that.
it's
Uh,
beautiful.
yeah, I'm talking to a friend of mine about that right now. He's got a home free and clear. It's worth a little over $1,000,000. I said, "David, you could probably get, a reverse mortgage for maybe $400,000 or something like that, and you could go buy a property for cash, rent it out, and have additional income or use that income to pay down the loan."
Yeah, and
So
depending on his age, so somewhere
yeah, he's
between
my age. He's
2 and
67.
okay, 60 it probably closer to, like, 300,000 in
Okay,
today's market, but still, absolutely,
but
it's
still.
amazing.
Yeah, and that line of credit again goes up, so when he's 70, 75, 80 years old, it could be worth $500,000, or
Yeah,
something
can
like
I
that.
address why that happens real quick?
Absolutely.
Yeah,
You're
so
you're my guest, you're the expert.
well, it's really cool because they designed it's cool and it's a little silly, so but it works in our favor, I think, as consumers. So, they designed the line of credit and they said, "Okay, if somebody's, like, 62 and they're qualifying for the reverse mortgage now, we don't want them to have to refinance all the time as their equity goes up because their property appreciates."
Mm,
So they added this feature onto this line of credit where it's a growth feature. So say you start with a line of credit of 100,000. Right
okay,
now, the growth rate is a little less than 7%. So in a year it's going to be 107. In 2 years it'll be 114 and a little bit more. In
right.
3 years 121. That just naturally happens so that you don't have to refinance all the time to get access to more of that equity.
Yeah,
Because in those 3 years, your property appreciated, and you're gonna wanna get access to that equity, and you're gonna need it, generally, most people want it, so
sure.
why not have it there? And if you don't use it, it just is just home equity, right? So if you
Yeah,
sell, that line of credit is part of your proceeds.
and the line of credit eventually kinda grows exponentially, because of the, compounding effect.
It does, it's
It's amazing.
beautiful.
The other beauty of it, in my opinion, is you can do anything you want with the money. You could buy property, you could go on a vacation, you could pay off the debt that you have, you could pay off credit cards, whatever it is, you
Yeah,
know?
it's your equity.
It's your money, you know? And you could keep your, assets over here. Let's say you have, several hundred thousand or $1,000,000 in 401k money, and you don't wanna touch that, you wanna let that grow. You could access this to help you live,
It's a
you know?
beautiful strategy, right? People don't realize if it's, 2,000 bucks a month for their mortgage payment, what that $2,000 a month could grow to if it was left in other retirement accounts.
Right. That's right, that's right. So, can the other question that people get confused about is, can they outlive, the benefits? You said 150 years old, but, what happens if you have a couple and one of them passes away?
Yeah,
Can the spouse continue to live in the property?
absolutely. So really good protections built in today. You cannot get a reverse mortgage in just your name if you are married. So we have to
In
add
any
that
state or
spouse.
just community property states? Like Texas is
All
community property.
states.
All states, okay,
All
got it.
states. There are some exceptions for some of the non-FHA programs. So I'm just speaking to FHA right now. So the FHA HECM, if you are married, you have to include your spouse in some capacity. If that spouse lives in the home, then they're a full-blown borrower. If they're eligible, then they're a borrower. If they're not age eligible, we have something called the non-borrowing spouse protection, and it actually protects that spouse. So the way it'll work, so two people, let's say they're both age eligible, both
Okay,
67 and one of them passes, as long as they were both borrowers, nothing happens to the mortgage. That the mortgage will continue on until that second person passes or decides to sell or moves out permanently or defaults on their taxes and insurance. Those are kind of the triggers for when when the mortgage is due.
okay,
But let's say instead that there's one spouse who's 67 and one spouse who's 59. Well, we have what's called a non-borrowing spouse protection, where that 59-year-old isn't a full-blown borrower, but let's say the 67-year-old does pass first. The 59-year-old is called a non-borrowing spouse, and they can apply for a deferral for the loan repayment. And often they're granted it. There's some paperwork. It should be pretty seamless. They have to make sure that they were married at the time that they did the mortgage and it was disclosed. They were disclosed as a non borrowing spouse. So spouses who get married later on, they're not protected. If like a
Okay.
single guy gets a reverse and then gets married later, that new spouse isn't protected.
Okay.
So a good strategy is to refinance her onto the loan. Um, but the non-borrowing spouse protection is a really nice thing because now that younger spouse can live out their days and the mortgage isn't due until they pass away, sell, or move out permanently or default on taxes and insurance.
Okay. Now I've been doing forward loans, if you will, purchase loans and refinance for 40 years. So I'm very familiar with how that structure works and how people can qualify. Tell us a little bit more about the qualifications of how a reverse might work, because there's some people, it's, in my opinion, there's like three categories. There's people who really need the money now. There may be people like myself who don't need the money now, but maybe want it to have access in the future. And there could be just people who are rich and don't need the money at all. Okay. But it still could be a benefit for them. So put on your counsel hat and share with us a little bit about how a reverse may work for pretty much any senior, and how people can qualify for that.
I love it. So let's start with the last example. So the wealthy. There was a loan officer I interviewed not too long ago, and he said, this client had 14 million assets. He still
Wow.
did a reverse mortgage. And so what we talked about was, well, why? Because the wealthy don't view their money the same. The wealthy view, this is a smart strategy. Why would I tie up all my equity and not have it working for me?
Hmm.
And
Hmm.
so wealthy will still do this, and it's a beautiful, beautiful thing. I actually find you in your situation kind of the middle ground between wealthy and needs based. A beautiful, I wish more people in your situation did this. I think this is a saving grace of the American retirement
Yeah.
because just
I
like
do
you,
too.
you're like, I may not need this money, but it's ready and available if you do. So you're not going to get into a situation where you're not paying your credit cards on time. You're not paying any other mortgages or property
That's right.
taxes.
That's right.
Keeping yourself afloat on those things puts you in a better financial situation for all credit, including the reverse mortgage, and it protects you. I mean, that line of credit can grow so big, it can pay for care when you're in your 90s if should you need it, or a new roof, or, people joke about the vacation, but that's not typically what I see.
I know, but it
But,
could be to maintain your property. I mean, let's say,
absolutely.
HVAC's $10,000,
Yeah.
just to maintain your property or update your property, things like that too.
Yeah, I had a lady who redid her reverse mortgage. It every now and then we can refinance them, and when rates drop, we often do, and that was her thing. She goes, "I just need $10,000 because my water heater went out."
Right,
It's
right.
like, that's 10,000 bucks for the water heater.
Yeah,
So we've got
crazy.
that middle ground that I wish everybody in that middle ground would do this. It
I
is such a smart thing.
and I heard a stat, that I don't know how accurate it is, but it came from financial news source, I forget. But in the senior market, let's say in the baby boomer over 62, there's about $7 trillion of equity in the country. Is that somewhat accurate?
13 trillion is the most recent number I've heard.
$13 trillion.
13
And
trillion.
only about 4 or 5% of seniors actually taking advantage of this. Is that correct?
Our market penetration is somewhere between 2 and 4%. You're right. But it's partially because it's misunderstood, it's unknown, and it's weird. People are just in the habit of paying a mortgage. When I tell them
Right.
you don't have to pay it anymore, they just psychologically, it's like they can't quite get themselves there. So it's like, well, okay, keep
Well,
making
I
the
got there
payments
pretty
then.
easy.
Right. Some people are like, oh, heck yeah.
Yeah, I
Um,
like that option. It's nice to have flexibility and options. I
it
mean, let's face it,
is.
I don't care what my
Yeah,
my kids always ask me, "Dad, why do you drive right down the middle of the street?" Because I said, "I like to have options, which way am I gonna go?"
well, that brings me to the third group of people you were talking about, the needs based,
Yes.
which a lot of my clients still are. And here's kind of what it looks
What do
like.
you mean by needs-based? Define that a little bit more.
Needs based. So the common thing in financial planning, which I'm not a financial planner, but a common thing that has been of the past is use everything and then do the reverse mortgage as your last resort.
Got
So
it.
that's what mean as needs based. It's often an adult child in their 50s or 60s themselves coming and saying, "Okay, mom and dad or mom or dad are, in their 90s. I don't want to move them to a care facility. We all know how there's some problems there and they don't
Sure.
want to go. It's their home. They should be able to pass in the dignity of their own home, but it's expensive." I just talked to somebody, the care is 12,000 a month just for
Yeah.
12 hours a day, 7 days a week.
Wow.
But the reverse mortgage is coming in and paying for that care. So, unlike your situation where you're gonna have more than enough giant line of credit, when you do the reverse mortgage, when you wait like that, the line of credit doesn't have time to grow. So they're limited in the amount, and
Got
it
it.
it just is like, I wish I could grab these families and be like, "Do this 20 years ago.
Right.
You'll have double." I can't say for sure double, but you'll might have a lot more available if you do this early
Yeah.
rather than waiting. But in any case, somebody in their 90s gets a decent size loan amount, and so they're needs based where their credit might already start getting damaged. They might be
Mhm.
low on income, which reverse mortgage is easier to qualify for because there's no mortgage payment required. So we don't need as much income, but we still need some. We got to
Sure.
prove you can pay your taxes, insurance, keep the
Right.
lights on. And so it just kind of puts those things in jeopardy. The people who wait and wait and wait, and it's a lot of shame and guilt and fear that stops them. And it's like, okay, I get that the unknown can be scary. And for whatever reason, they think, oh, if I have to look at the home equity, I failed somehow. And it's like, but that's the biggest investment, the best investment you've ever made.
That's right.
How are you
That's
not
right.
going to touch it?
Yeah. And I
So
would suspect for most people, most seniors, that their real estate is probably the largest portion of their net worth,
it
you know,
is. And from the
and
numbers I've seen,
and they've made good decisions around that in the past, so why not take advantage of it while you can? That
yeah.
that's my opinion on that for sure. So, uh, so let's talk about if you're giving advice to senior, which you are right now. You've given me great counsel around my own situation, and I'm on board with the deal for sure. But in general, how do you speak to seniors around that? How do you give them good counsel and alleviate some of their fears around that?
The best I can do is try to stand in their shoes. So
Yeah,
my process is to ask a bunch of questions, some informational, some just tactical, like, is your home safe for you to be able to stay there? Are you comfortable? And sometimes these conversations, well, there are three flights of stairs and the driveway is 8 miles long. And
right, right,
so
on a
sometimes,
hill.
yeah. So sometimes it's like, should we be looking at the reverse for purchase and maybe get you into a home that's better suited for your needs?
Mhm.
But my job is really to do my best to stand in their shoes and sometimes, like, holding hands with their family or their kids and say, "Okay, what's the best solution in this case?"
Mhm.
And I'll present the best reverse mortgage. If they have some debt, let's get that paid off. If you need some extra income, cash flow every month, let's figure that out. Let's leave a line of credit as a safety net. I like to do the mix and match. We can do it, so why not? Make it
Right.
super customizable.
Yeah.
And then honestly, most of the time, the feedback is, "Oh my gosh, this just took so much worry off my life." I had somebody who said that she beat cancer because it took the financial strain off.
Wow.
Yeah.
Now that's a testimony right there for
Yeah.
sure. And you brought up a point that I wanna hit, and I failed to do so thus far, but we got a few minutes left. Let's talk about reverse mortgage for purchase as well, because most
Yeah.
people think about it, I'm in a house and I'm gonna refinance it and get a line of credit. But they could also, like you sell if the property doesn't suit them anymore, the master bedrooms or whatever upstairs, and they need to move for whatever reason, they could take that equity, sell that property, and take that and buy another property, you
Yeah.
know? So talk about that.
Yeah, so it works similarly. You're gonna have the same loan amount whether you're changing houses or not. So, like, if it's an LTV, loan to value, which we don't speak in LTV terms, but it'll be the same number. So let's say you can get a loan for a reverse mortgage for about 30%, which, shocker, the numbers are lower because we want you to have equity. We want there to be
Right.
equity for your heirs to inherit, and generally there are.
But that's depending
Um,
on age too. So 65, 0
depend
to 75.
Yeah, so
Right.
a 65-year-old can't get as large of a loan amount as a 75-year-old, who can't get as large of a loan amount as an 85-year-old, same thing as a 95-year-old. But it pales in comparison to that line of credit growth rate. So some
Mhm.
people say, "Oh, I'll just wait." That's not the right strategy. But if you are older, you will get a larger loan amount at the time you put this in place. So talk about purchase. I have a client right now, exactly what you said. House is about 1,000,000. She's got a $200,000 mortgage that she'll pay off. So she's going to come away with 800,000 cash.
Okay.
She wants to buy a house for about 600,000. And now these are California prices. I get they might be high, but so she wants to buy a house for about 600,000. If she were to do that with just cash, she would have about 200,000 left, right? But that's all she has. This is the rest of her retirement. Everything is
Mm,
in the equity of the home. And so with the reverse mortgage now, the reverse mortgage is coming in to finance 200,000 of that new purchase.
okay.
So she's got to bring in 400,000. The reverse mortgage is going to cover 200,000. That gets us to the 600,000. But what just happened to her cash flow? that turned in from 200,000 to 400,000
Yeah.
in her assets and retirement accounts that will continue to grow and protect her. So rather than sinking all the cash in, she's doing the reverse purchase and she's meeting the same goals. No new mortgage payment, right? That was the big key.
Right.
Still has to pay taxes and insurance and live there as a primary residence, but that's what she was going to do anyways.
Right. Yeah. People just need to. That's why I had you on, because people need to know this. This is really, really important stuff. We've only got about a minute left. Talk about a little bit about the downside. Are there any negatives people need to know about?
There are.
Relationships?
Yeah, it's a financial tool, so there's always pros and cons.
Sure.
Some of the cons are you have to live in the home as your primary residence. So
Okay.
you can't move out, and sometimes I'll
You
have
can't rent it out.
you can't rent it out. Yeah, and you need to if your plan is to go into assisted care, maybe a reverse mortgage isn't the best plan unless that's a long ways away. Sometimes it's a stopgap, right? Keep me in my home until I can't stay any longer.
Okay. Okay.
But also, if in markets that don't appreciate very well, I don't like doing reverse mortgages unless they really, really have a good case for it. And sometimes they do. But I like to be able to meet three goals. What do you need now? What do you need through retirement? And let's leave your heirs something at the end. And the
Got it.
way we can structure that works the best in markets that actually experience some appreciation. Doesn't have to be crazy high, but something.
Well, we could keep talking for another hour or two, but
Yeah.
the show is running out, man. And I really appreciate your time, Christina, and your expertise and your passion. And I can't wait to close my deal with you here in the next few months.
Thank you, Mark. It's been an honor to be on, and thank you for helping getting the word out. This is an amazing financial tool. It can be used for good or bad, and I like to use it for good.
Amen. All right. Well, you